Welcome to the Private Practice Survival Guide podcast with your host, Brandon Seigel. I'm a published author, speaker, entrepreneur, and private practice strategist dedicated to transforming the way that healthcare functions. This podcast is all about empowering you to create the change you want to see. Let's dive in. Welcome back to the Private Practice Survival Guide podcast. In this episode, we're talking about something really special to me. The concept of understanding a multiple tax ID approach. And I say this because a lot of the times people don't recognize, but this is something I'm really a big believer in. And I want to add the disclaimer. When you're looking at embracing a multiple tax ID approach, you must consult with a lawyer, your CPA, compliance officer, everything. This episode is just about unlocking a perspective on what if you had a multiple tax ID private practice approach. And so this came to me in full transparency. It came to me because I had a clinic. Everything was under a single tax ID. And we had all these different payer sources and we had all these different stipulations. And we got to a point where we couldn't do one thing because it contradicted the other, et cetera. Oh, you can't do private pay because you got Medicaid. You can't do this because of that. And what I felt was my funding sources were a prison to me being able to serve my community. And if I eliminated that prison, then I wouldn't be able to help all of the people who are connected to that prison because that funding source created accessibility for those that needed our services. But there were services that they would benefit from. And I wasn't able to tap into all of the resources. And what I found was I became a byproduct of my funding sources. I treated the contract, not the client. So when I have a multiple tax ID private practice approach with legal approval, I'm able to unlock new strategies where I'm able to offer more resources with less red tape. And I want you to think of this concept. And again, I'm going to break it down, but imagine so I recently went to this restaurant establishment in California. And I don't remember the name, so I apologize, but I'm going to give you the concept. And basically, you go in, and it was 6 individual chefs that were testing their restaurant concept. So I could order from either menu. They had the shared reception staff, they had all the different pieces, and I could, quote unquote, get multiple things from that. So, for example, I wanted Chinese food. There was a Chinese chef doing Chinese food. So maybe I want my appetizer to be of that cuisine. But then I wanted a gluten-free wrap. They had that. They actually had gluten-free fried chicken, which is incredible. And they had a play on a Sunday that they called a Saturday. And I bring it up only because now all of a sudden, I don't have to go to just Chinese food. I can go get other things. So the idea of this private practice multi-tax ID is, what if you could be an urgent care? What if you could be a cash pay functional medicine clinic? And what if you could be a educational health and wellness vitamin company, all in the same umbrella without breaking your payer contracts? And then on top of that, what if you had another tax ID that was a management service company that generated $10 million a year in supporting not just your different tax IDs, but hundreds of other tax IDs? See, you don't recognize the MSO model. You're missing out. It is a must. And the beautiful thing with an MSO, and we're going to talk about this, there are opportunities for your MSO to be a succession to a non-clinical related person. So you could create businesses that succeed to different people, different reasons because of the way they operate. And so there's so much to this for me to unpack, but the goal, prison break. I want you to play by the rules, but I want you to tell insurance, I'm not just going to play by your rules. I'm going to change your client, and I'm not going to let you criminally stop them from getting things that they can benefit from. So we build all these different resources. And what we end up showing insurance is I played by your rules, I created different rules, and I changed the world. I changed that patient because I was able to not just play within your prison cell, but I was able to see them outside your prison cell. You can see how passionate I am about this. I'm so tired of being stuck that I love the idea that I can tap into the best parts of that prison while being able to unlock a whole nother freedom to create, connect, and change the landscape of healthcare. So the 3 tax ID model, and that's what I'm not saying other people have not thought of this, but I've really kind of put this number of 3 tax ID model into my own. I came up with this in my own studies, and it represents a sophisticated business structure that separates healthcare operations into 3 distinct legal entities, each with its own EIN number. We've got a government, commercial, and anything audible tax ID, everything, Medicaid, Medicare, state funded, you name it. Anything that someone else is paying you for is under that entity, fully auditable, MPI'd, fully transparent. Then I have another tax ID, 110% cash, no NPI, no insurance coverage, cannot be governed or dictated in any way connected to it, to the insurance contracts. And then I have a third tax ID, which is my staffing company, my MSO. And I build talented staff for a living that support HR, medical billing, marketing, client care, technology, and everything. And I don't just support the HR function to these 2 tax IDs, but I roll it around the country. And by rolling it around the country, I'm able to bring on more staff, bring on more resources, expand my capability from a benefit and comp structure. And this is my point. By building my MSO, I was able to be more competitive with my pay for my prison cell funding sources, because now I'm able to take less margin because I'm making margin in different ways. And so this approach provides enhanced operational flexibility, improved compliance management, expanded patient care options while maintaining regulatory compliance across different payment models. Again, seek out expert advice. You must invest in lawyers. You must invest in CPAs. You must invest in consultants. You want to get to the next gear, hire those to protect you. So, my 3 entities: Management Services Organization, again, MSO, Insurance and Government Contracted Medical Practice, concierge private pay practice. All 3 entities, they coexist. They've got defined totally different tax IDs. There is only one MPI. I do not practice with an MPI on the concierge private pay level. And I ensure that all employees are being subcontracted into those 2 different entities through my MSO model, as well as other models. So in our MSO, this is the backbone of the operations. This is your human resources, your staffing coordination, your administrative services, your office management, your technology infrastructure, your IT support, your marketing and business development, your financial management, your accounting services. Get it? Facility management, lease agreements, equipment procurement, maintenance, training, continuing ed programs, etc. That is our MSO. In this MSO, outside the box, I want you to be able to offer these services to other service providers so it becomes its own revenue stream as an entity. This can be an entity tied to a non-licensed spouse, so it also can be a succession plan, typically structured as an LLC or a corporation. thinking of it as a staffing management consulting firm, even a medical billing company. Technically, Fly High Business Builders LLC DBA Wellness Works Management Partners operates in this deconstructed MSO. And I call it a deconstructed MSO because some MSOs out there, that phrase requires certain ownerships and certain legal components. So I call mine a deconstructed MSO. Payment approach. This can generate revenue via lots of methodologies. It can be percentage of revenue tied to actions with staff. It could be fee for service project. It could be time-based reimbursement, all different ways to unlock the revenue to that entity. Entity number 2. Are you ready? This is your insurance prison. Medical necessity. That is the only objective of this practice. If it's not medically necessary and it's not a covered service, it does not go through this function. It is a traditional medically insurance covered practice serving insured patients. Plain and simple. It holds all your insurance contracts, commercial, Medicare, Medicaid. It maintains provider enrollment and government programs. It's subject to insurance audits, compliance requirements, etc. It operates under strict regulatory oversight, and it limits only to what services are covered by contracted payers. It is bound by insurance reimbursement rates and its limitations. Plain and simple. Now, in this medical necessity practice, this will be your professional corporation. This is where your insurance contracts govern the work you do under this tax ID. You will only have MPI utilization under this specific umbrella. Your payment approach, all funding sources contributing to accessibility of care based on medical necessity, government funding, insurance funding, any other funding that classifies under a contract that is restrictive in nature related to services offered to a beneficiary. Entity number 3 are concierge and private pay medical practice, serving patients beyond medical necessity, optimizing patient care without limitations. This is your practice with no borders, complete freedom from insurance restrictions, offsetting accessibility of care with outside of the box outcomes, expanding service offerings not limited by coverage policies, diversification of services, funding, etc., flexible treatment protocols, innovative care approaches, membership models, subscription-based care, extended consultation times, personalized care. 2 clinics next to each other, separate entrances, separate exits, the whole bit. You come in, you get 45 minutes of a visit here. Guess what? Drop on over. We've got infrared. We've got this. We've got that. Go spend hours there. But guess what? I'm 50% less than cash pay clinics because I have other means to diversify. So I'm one of those people that says pigs get fat, hogs get slaughtered. We're not going to be a hog. We're going to be the best value in America because we're working off of a margin that is sustainable, but we are diversifying so that we are competitive. So now your money goes farther with us. Get it? Got it? Good. So in this concierge model, this will be another professional corporation. It will be a non-NPI model. Shift the paradigm of clinical care. This is through membership fees and direct pay and everything. And so what I want you to recognize is 1, I'm going to say it again, get legal advice. Do not take this podcast for, this is an idea, this is a concept, this is not consultation. Do not do it without legal counsel. But imagine if you're a physician. And imagine if your passion is health and wellness. What if you had an urgent care clinic, and in that urgent care clinic, everything was insurance, and you did well visits, you did urgent care, you did everything you can think of in that sense. And then you had a health and wellness boutique concierge practice. And this is where nurse practitioners were doing IVs and doing all different wellness activities and all different things Imagine if you offered fitness. Imagine if physical therapy was under both your medical model, but then there was a sports engineered physical therapy approach where you're engineering the wellness of someone to be more competitive. Again, you get where I'm going, but what if we created models of compatibility to support patients, not just on an acute viewpoint, but innovating the way that their health functions? So, here are some of the strategic benefits of our three tax ID model. One, enhanced patient accessibility. There's a dual pathway to access. Patients can access care through their insurance benefits while also going in for additional services through a private pay entity. There's comprehensive care solutions addressing both covered medical, enhanced medical, and elective medical. Reduced wait times. Private pay can offer immediate access, whereas insurance may have delays. Operational flexibility. There's service diversification. We're offering services not typically covered by insurance, wellness programs, aesthetic procedures, extended consultations, etc. Pricing freedom. We get to set our competitive rates for private pay without insurance fee schedule restraints. There's innovation opportunities. Implement cutting edge treatments, technologies without waiting for insurance approval. And then there's also risk management. There's compliance isolation. We have insurance related compliance issues remaining contained within a contracted entity. There's audit protection with separate entities limiting exposure. There's financial risk mitigation. We are diversifying our revenue streams and we're reducing dependence on any single payer. The other thing we're doing is we're optimizing revenue. By bringing in multiple revenue streams, we can have insurance reimbursements, private pay, management fees, etc. Higher margin services. Private pay entities can offer premium services sometimes, better profit margins. Sometimes when we have different ways to bring about revenue. So imagine if I gave you $1 million right now of non-insurance funding, all through managing practices. Would that change your trajectory? Yeah, there's different ways. So now you might have a 15% net profit margin medical model, a 20% cash pay private concierge model, and a 35% MSO model. You don't know. So immediate payment from private pay will increase your cash flow. Being able to MSO this thing will allow you to tackle different objectives in your staffing approach and creating retention through diversifying how and where and when and the way that they serve. What if I told a nurse that I can send you anywhere in the world? I can give you 6 weeks of paid time off and 2 week vacations in the Bahamas every year. Like all of a sudden, we're unlocking a whole new way of staffing through this. Now, the other thing that we want to be aware of is legal and regulatory compliance. We must ensure each entity has separate legal documentation. They must run as independent businesses. We must have intercompany agreements if you are utilizing each other, which you are most likely. You must have regular legal review to ensure ongoing compliance and regulate your state specific regulations because different states have different requirements related to this. The other thing to think about is financial management. I want separate accounting systems for each entity. I want transfer pricing documentation for intercompany transactions. I want individual business licenses and permits, and I want distinct insurance policies for each entity. We need to make sure we have operational coordination when we're implementing this. So clear protocols for patient referrals between entities. Shared resources must be properly allocated and documented. We must have our staff that work across any entities have clear employment relationships defined. Technology systems may be shared through the MSO, but there must be a payment model, meaning the MSO is the one that generates all the technology on behalf of what it does, but have it do the same thing for everyone. So we operate any company that we contract with. This is the EMR. This is the way our financial accounting. This is our payroll system, etc. So that it's uniform in that way. We want to make sure that we have the right patient communication strategy, transparency, education, clarifying different companies, different purposes, different missions, visions, clearing up what medical necessity is and when something is seen outside of the scope of medical necessity. Clearly defining a good faith estimate for each entity, working with legal teams on your communication approach. You must ensure that you have a seamless experience, integrated scheduling systems across entities, consistent quality of care regardless of payment method, clear billing processes and payment options, unified patient communication and follow up. Here are some common misconceptions and clarifications that I tend to see. A lot of people think this creates barriers to care. The reality is the model actually removes barriers by providing multiple pathways to access care and reduce insurance related delays. A lot of people think it's too complicated for patients. Patients experience seamless care with clear options. The complexity is managed internally through proper systems and training. The other thing is that a lot of people are like, well, insurance companies won't allow this. This structure can be, and note that I said can be legally compliant, and many successful practices operate under similar models. It is crucial that you get legal involved, but insurance has no jurisdiction on a tax ID that they're not connected to. And you have to look at the ownership and all the different articles of incorporation and make sure you're doing it right. But if you do it right, you should be free of the burden of that contract when it is correctly contracted and correctly set up in your legal infrastructure. Financial projections and ROI, typical benefits. So I tend to see 15 to 30% increase in overall practice revenue when they implement this minimum. Improved cash flow through diversified payment streams, reduced accounts receivable aging, higher profit margins, and enhanced practice valuation through multiple rev streams. Something I recommend for your next steps, I want you to get legal involved. You're going to involve probably multiple attorneys, a tax attorney and a healthcare attorney and a business attorney. I want you to work with a healthcare CPA to model the financial implications. I want you to work on your entity formation. I want you to work on your system integration, implementing technology and operational systems. You want to start to educate your team on new processes and patient communication. Develop your messaging for dual pathway patient care and ensure that you have compliance protocols clearly identified. The impact of multiple tax IDs on insurance funding, it's going to streamline your funding audits by creating clear audit trails for each tax entity, making it easier to track premium payments, claims, and financial flows during regulatory examinations and internal reviews. It's going to enhance compliance management by allowing separate compliance tracking for each tax ID, ensure adherence to state specific insurance regulations and federal tax requirements across different business entities. It's going to improve risk segmentation by enabling insurers to isolate and assess risks associated with each tax ID separately and leading to more accurate underwriting and pricing decisions. Facilitating regulatory reporting by providing distinct reporting structures for each entity, simplifying the process of filing required insurance and tax documents. It's going to be safer and you're going to be able to target funding strategies so that you are able to have more control versus being the effect. The other thing I want you to think about is this is going to help you reduce cross contamination liability by maintaining separate financial accounts and insurance policies. You're going to be able to protect each entity's assets from claims against another. You're going to be able to optimize your tax efficiency by allowing each entity to maximize available tax deductions, credits related to that, and specific tax structure. Simplify your claims management by creating clear ownership and responsibility lines for insurance claims, reducing disputes and accelerating your claim resolution processes. And then you're going to be able to enhance your cash flow management, separate premium payment timing, funding arrangements. You're going to be able to have clarity on numbers for once and for all. So when you're budgeting with multiple tax IDs, we want to create separate budget categories for each tax ID. We want to maintain financial boundaries. We want to maintain compliance boundaries. We want to prevent commingling of funds between different business entities or subsidiaries. We want to establish consolidated reporting frameworks that allow you to view each individual tax ID performance like its own business, generating reporting and cross analysis. You want to implement entity specific revenue forecasting. You want to allocate your shared expenses proportionally. You want to schedule staggered cash flow planning so that you're optimizing your working capital by coordinating your timing and your collection cycles across different tax IDs to maintain overall liquidity. Some things you also want to do is you want to budget separate emergency reserves for each tax ID to handle entity specific risks and unexpected expenses without impacting other business units' financial stability. We want to track tax obligations independently by maintaining separate budgets for federal, state, and local tax liabilities associated with each tax ID to avoid underpayment penalties. Monitor your intercompany transactions. Implement your budget approval process, utilize specialized accounting software, and plan for varying fiscal year ends. So, the pros and cons to shifting your operating basis to an MSO. Pros: enhanced operational efficiency. By outsourcing non-clinical administrative tasks like billing, coding, HR management, compliance oversight, and allowing providers to focus entirely on patient care, you will have more efficiency. There's economies of scale advantages. There's improved revenue cycle management because you're able to do more with less. Improved regulatory compliance support, access to capital and investment, streamlined HR and staffing solutions, technology and infrastructure upgrades because of scale, and risk mitigation strategies, including malpractice insurance coordination, financial oversight, and strategic planning support to protect your practice assets. Those are all some of our pros. Cons: well, when we're using an MSO, we've got reduced practice autonomy. MSOs may influence your operational decisions, vendor selections, business strategies, potentially limiting flexibility in the practice management space. Significant, there can be contractual commitments, and I'm just saying generalized. I'm advising you to create your own MSO, but there are some contractual commitments when you're operating as an MSO. It's a free structure burden, potential compliance risks if MSOs improperly structured, a loss of direct vendor relationships, cultural and operational misalignment sometimes when your MSO grows, financial transparency concerns sometimes, and dependency risks. So just understanding when you're using an MSO. Now, if it's your MSO, it's a little bit different. Did you know that private practices using a multiple tax ID approach, such as separate EINs for different service lines or locations, reported a 28% higher revenue growth rate compared to those using a single tax ID due to improved financial organization and tax optimization? This came from MGMA, Medical Group Management Association, in 2024. That's pretty cool. Now, our quote for the episode was inspired by Peter Drucker. Embrace the creativity of multiple tax IDs to structure your success, each one a brushstroke painting a more resilient, thriving business. Thank you for tuning into this episode of the Private Practice Survival Guide podcast. Don't forget to like us, subscribe, and write a 5-star review. It would mean the world to me. And don't forget, together we can thrive, not just survive. Thank you for tuning in to the Private Practice Survival Guide podcast. I'm incredibly grateful to each and every one of you. Exciting news. We're now available everywhere, from Spotify to Apple Podcasts to YouTube or anywhere you like to listen to your podcasts. So watch, listen, and reach out. If you loved this episode, please drop a 5-star review. It truly means the world to me. Are you looking for more ways to elevate your practice? If so, now is your chance. Reach out, go to my website, or email me at brandon@wellnessworksmp.com. And remember, it's not just about surviving, it's about thriving.